of Operations Committee for Thursday, May 7th. Please rise for a pledge of the flag. Led by Ms. Trainier.
To the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Roll call, please.
Pretzel. Butler. Follage. Williams. Bullock. Costa. Trainier. Hickey. Oxley.
Yes.
Also present Secretary Freeman, Treasurer Berkowitz, and President Ogala. We have 7. We have a quorum.
Thank you. For future use here, guys, the meeting started at 7, not 8 minutes after. You're out, Steve, you're out lollygagging, getting your coffee and stuff. Let's get a little prompter here. Okay? Chop, chop. What time? 9 after? I'm sorry, Vince, I'm on an angle here.
Starts at 7.
Oh, 9. Well, 7, we can start at 7. Tracy's in. You guys want to change it to 7? Yeah, okay. We can do that. All right, thank you. Do we have a motion to approve the minutes of the April 2nd meeting? Motion by Hickey, second Trainier. Any questions or comments? Hearing none, roll call vote, please.
Pretzel.
Yes.
Butler. Follage. Williams. Bullock. Costa. Trainier. Hickey. Oxley.
Yes.
Yeah, we have 8. We have a.
Motion carries. Thank you. Excuse me. Under new business, we have the award of a contract for $190,141 to Construction Solutions of Illinois for annual asphalt crack seal and seal coating and restriping. Do I have a motion to that effect? Motion Trainier, second Hickey. Previous ballot. Second Williams. Any questions or comments? Yes or no? No. All in favor? Any opposed? The ayes have it. Motion carries. Second, we have an awarded contract for $286,585.06 to Engineering and Research International to complete a district-wide pavement assessment. Do we have a motion to that effect? Motion Costa, second Hickey. Previous ballot. Any comments, questions? All in favor, signify by saying aye. Thank you. Third, excuse me, we do award of a contract in the amount of $430,984 to Terra Engineering for Phase 2 engineering services, DuPage River Trail from DuPage River / Weber Road Trail improvements, part of the capital improvement program for 25 to 30. Motion Trainier, second Hickey. Previous ballot. Second Bullock. Any questions or comments? Maybe we shouldn't do it then. All in favor? Any opposed? Motion carries. Number 4, award of the contract of $552,321 to Patrick Engineering for Phase 2 engineering for the Wolf's Crossing Road trail improvements as part of the 25-30 capital improvement program. Motion Trainier, second Hickey. Previous ballot. Second Costa. Any comments or questions? All in favor? Any opposed? Motion carries. Thank you. Number 6, permission to bid the demolition of 2 deteriorating concrete. Oh, I'm sorry. I went right by it. Thank you, Brian. Permission to rebid the Isle of Cache infrastructure improvements, part of the 25-30 capital improvement program. Motion Trainier, second Hickey. Previous ballot. Questions, comments?
I just wondered, I can't remember. I know I should remember. This was probably a meeting or 2 meetings ago. why we're rebidding it? Was we didn't get enough bids? Was that the issue? That's what I seem to recall.
So we didn't get any bids.
Yeah, that
So
was it.
we presented this last month. We didn't get any bids. We did get some interest in the project after the bidding had closed. So we're rebidding it the same exact as we did last month to see if we get interest this month. If we don't, we'll have to come back with we'll split it up a little bit.
Do you think it's because everybody's already so busy for the season or?
I think so. It is a wide range of work. It's
Mhm.
a couple different things that go into different
I read.
avenues. Yes.
Yeah.
So I think that is the scope is
The
is
diversity.
a little, yes, is a little large for some of the bidders, but we did find some interest, so we're going to see if we can get a bid this time around.
Okay, thank you.
Thank you. So we're on
Was-
previous,
Was there a second to the motion for previous? Okay, thank you.
second by Williams, yes. Any questions, comments? All in favor signify by saying aye. Opposed? Motion carries. Number 6, permission to bid the demolition of 2 deteriorating concrete silos and an attached lean-to structure at Tempest Farm Preserve located in Beecher. Do we have a motion? Motion Costa, second Hiskey. Previous Balich. Do I have a second? Second Bullock. Do we have any questions or comments? Hearing none, signify by saying aye. Opposed? Motion carries. We have no executive session. Actions reports. We have a report for capital projects quarterly status.
I presented most of the items last month, so if anybody had any questions, we can entertain those, but
Any questions? No? Okay, any comments by the public? Comments by commissioners? Micah? I knew you were going to talk.
I've been silent all morning.
I know, I was scared.
So, I don't know if I should mention it here or in finance, but there was a question about, Heritage Corridor did some benches and they were curious, about, one of the commissioners was curious about the cost of the bench per bench. And I can tell you it was right around $9,500, $9,500 per bench. And that did not include installation. So, our $9,000 benches seem like a good deal. Like they may not be artistic like these, but I think that we did fine. So thank you. That was all. Oh, and don't forget to sign up for the tours this summer.
Do we have a list?
Thank you. You know, I
It's
want
in
to
an email.
comment about those benches. Dan Butler and I broke those down as cost factors for the whole thing. And in the construction business all these years, it's pretty close. And we didn't even take into effect the bidding requirements or bonding, insurance and stuff of that nature. It's just lack of knowledge on the item. I thought we had that under control of understanding where it was at. But thank you, Micah. Any other comments by commissioners? Okay, hearing none, we'll accept a motion to adjourn. Motion Balich, second Hickey. All in favor signify by saying aye. Thank you much. I'm going to be quiet.
Okay. Wait, oh, we don't have a quorum? Who's wait, how many, I don't even remember who's on the committee. Okay, there's me, Vince is on the committee, right? Julie. Oh my God, so it's just me, Vince. No.
Yes, we need seven for a quorum.
Sherry can make a quorum. Sherry Williams, can't she? Oh, no, because she's only an officer. Okay. Is Herb, oh, Herb, yeah, there's Herb, right? Herb's here. He's right there.
Come on now. these-
Herb, we need you. We need you to make a quorum. Okay, so there's 7 of us now?
There's.
Okay, okay.
She's just telling her.
Okay, we're calling the Finance Committee meeting to order at 9:16 a.m. And Herb, since you're already standing, will you lead us in the pledge? To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Can I get a roll call, please?
Van Dyne. Dean Schlotman. Richmond. Brooks. Winfrey. Revis. Mitchell. Logan. Newquist.
Here.
Also present Secretary Freeman, Treasurer Berkowitz, and President Ogala. We have 7.
Okay, so do we have 7 with President Ogala? Okay, thank you. All right, next, first order of business, D, schedule the bills. I need a motion to approve the bills for $1,957,939.86. Move Ogala. Second Brooks, roll call, please.
Van Dyne.
Yes.
Dean Schlotman. Richmond. Brooks. Winfrey. Revis. Mitchell. Logan. Newquist.
Yes.
President Ogala. We have 7.
Okay, motion passes. Next up is approval of minutes. Can I get a motion? Motion Ogala. Second Van Dyne. Excuse me, previous Logan. Second Brooks. All in favor? Aye. Opposed? Motion carries. Old business, we have none. New business, we have 1 item to bring forward, approval of ordinance number 707, establishing the 2026-27 land use fees of the Forest Preserve District of Will County. Let's get a motion in a second, and then we can have discussion if anybody has questions. Mitchell, second Ogala. Okay, questions? Discussion? Tracy, any comments? Okay, can I get a previous roll? Previous Brooks? Second Logan? All in favor? Aye. Opposed? Motion carries. We have no need for an executive session, I hope. We do have a couple of reports attached, the quarterly cash and investment report and the quarterly quote approval report. Does anybody have any questions about those reports? Okay, then our next meeting date is Thursday, June 4th, immediately following the Operations Committee meeting, but no earlier than 9:15 a.m. right here at the Will County Office Building. Are there any comments by the public? Comments by the public? One more time, no comments by the public? Okay, comments by commissioners? Okay, I'm not going to ask that 3 times. I'll take a motion to adjourn. All right, all in favor? Aye. Opposed? We're adjourned. Oh, yeah. For those of you on the OPEB committee, don't forget we have an OPEB meeting at 10 o'clock, right? Oh, at 9:30. Thank you.
Good morning, everybody. I'd like to call the Retiree Health Insurance Trust Fund meeting to order at 9:40. Would you like to lead us in the pledge? To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Could we have a roll call, please?
Lukasevich. Here. Schultz. Here. Newquist. Here. Chapman. Here. Secretary Freeman. President Ogala.
Here.
We
Thank you.
have 6, we have a quorum.
Thank you. Can I get approval of minutes from our OPEB meeting on February 5th? No, you
can't.
can't. Motion, Newquist, second Freeman, roll call, please. But thank you for your enthusiasm.
Lukasevich. Schultz. Newquist. Chapman. Secretary Freeman. President Ogala.
Yes,
We have 6 minutes to approve.
thank you. We do not have any old business. New business is our quarterly schedule of bills.
The motion to approve.
Can I get a motion to approve? Motion Lukasevich, second Schultz. Previous Newquist, second Freeman, all in favor? Any opposed? Motion carries, thank you. We do not have executive session. Moving on, we have our reports. We have our quarterly investment report. We have a presentation by Bussey Management. Thank you for coming today.
Thank you. I'm glad to be here. Appreciate that. I'm recovering from a bit of a head cold, but it should be okay. So, and I was asked to give, my name is Derek Sassfeld. I'm Director of Research and Strategy on the investment team at Busey Wealth Management, part of Busey Bank. And I'm joined by some colleagues here today who may be familiar to you. I'm here just to discuss for about 10 minutes the performance of your portfolio, which has a target weight of half stocks and half bonds. It's drifted to about 55-45 as of current, and your performance has been reasonably strong. And we've been competitive, more than competitive with what markets have provided. The first page called of the presentation that's given to you in hard copy, but also was delivered electronically. The second page after the cover page contains performance information, and there are basically 3 items of information in here that I think are most relevant. The returns, obviously, are compared for your portfolio. That's shown as return in the 5th line of that table. 3% for the last 3 months. For the year to date, roughly a little bit more than 3 percentage points, 17 percentage points for the last 12 months. For the last 3 years on an annualized basis, a little less than 13 percentage points. And then since inception, which was early in 2023, about 11.5%. That's very strong. That's more than what we typically would expect for something of this risk and something allocated like this. That's because the stock market has performed very well. You can see that as shown by the MSCI All Countries ACWI return, which is global equities, which is the line below the line for performance in your portfolio. The S&P 500 has performed spectacularly well, especially since the inception of your account. So since the beginning of 2023, you may recall there was a bear market in 2022, in part triggered by the Russia-Ukraine conflict, in part triggered by the Fed raising interest rates. But subsequently, especially the performance of artificial intelligence related technology companies has powered the Standard & Poor's 500 to performance that has been exceptionally strong. Okay? You have benefited from this. You have some drift in your portfolio. If you're now 55-45 in your allocation, you might consider rebalancing those percentages, and we'll talk a little bit about why that may be the case. The allocation of your portfolio is shown on the bottom left. Mostly stocks with some fixed income and some cash. And then you can see, and a key element of your investment policy is control of risk and preservation of capital. And you can see that you've had few drawdowns since the beginning of this relationship, especially most notably in around the tariff issues last year. But there's been recovery since then, and then also the U.S.-Iran conflict, and there's been recovery since then. So that's performance, which is good. We can talk a little bit more about what has driven that. But there was a question, I was made aware of a question in advance about sector allocation and the sector allocation of the stock part of the portfolio. So I'm sorry for, on page 3, putting in a lot of numbers in a table, but I'll ask you to focus on the top half of this table with the blue header. Your allocation, your sector allocation in your stock portfolio is indicated as Forest Preserve District of Will County, or FPDWC. That in the first left-hand panel there is compared to what a typical U.S. equity portfolio is managed like for us. You're not too different from that. Those differences are pretty close. And then also compared to the Standard & Poor's 500, which is a reasonable U.S. large company stock index. And in your investment policy, you're described as investing in blue chip U.S. companies. That's a very good manifestation of that. The sector allocation is shown there of your portfolio relative to that of the stock market, and you'll notice a couple things. First of all, technology is extraordinarily important to the performance of the U.S. stock market. Information technology, which is fourth from bottom, that sector, currently weighted 35.4% in the S&P 500. And a few years ago, the S&P re-weighted the index and reclassified some companies into other categories. Communication services, the line at the top, 11%. That includes Amazon. It also includes Facebook, which are known generally as technology companies. Consumer discretionary is less technology intense, but that also includes Tesla and a few other formerly known as technology companies. So roughly about almost 50% of the U.S. stock market is weighted in technology. That's very different from other parts of the world, and it's very important for the performance of your portfolio. On a sector basis, you'll note that that's where you are most underweighted at this point in time. Okay? We are making changes to the portfolio to find technology companies that we find attractive or reasonably attractive. They're hard to find. Valuations are aggressive. That's true for just about everywhere in the stock market, but it's especially true for technology companies. And since the ceasefire in U.S. and Iran, there's been a very strong performance in technology shares, and some of the companies that have done the best, in our opinion, are those that are least attractive. So there's been a strong rally in companies that don't have the most attractive fundamentals, but for whatever reason, catch the favor of the market at present. On page 4, just to take a look briefly at performance of the sectors in the stock market, again, relative to this sort of question about sector allocation. Each column here shown to the right is heat mapped, and the total return performance of each of the sectors in the S&P 500 is shown there for each time period. I would just call to your attention for the last 1 year, that's the 5th column of numbers to the right of the labels. You'll note the best performer has been energy, right? This is understandable given, every gas station I pass these days probably has gas prices higher than $5 a gallon. The price of crude oil has been cycling around $100 a barrel, which is very high, but relevant to the supply shock that we've seen in the wake of the U.S.-Iran conflict. And you'll note that energy companies have performed probably the best year to date and for the last year for that reason. But of late, in the month of April, 2nd column to the right of the labels, you'll note technology shares have risen 17% in April alone. Consumer discretionary 18%, communication services 18%, consumer discretionary 12%. Those have been the big winners, not only just in the rebound since the ceasefire, but also over longer time periods. You look at the 3-year period to the right of that vertical dark line. In the last 2 columns is 3-year annualized and your since inception. And you'll just note the strength of technology, the strength of communication services, the strength a little bit less so of consumer discretionary. Technology has come to dominate the U.S. stock market, and we're trying to manage around that the best that we can. Okay? We want to participate in some of that strength, and we certainly have, and your portfolio has. But there are limits. When we look at page 5, just very quickly, this is valuation information. We do have proprietary valuation information, but in the interest of time, I borrowed from Goldman Sachs. This is information that describes the forward 12-month price to earnings valuations in the US stock market. This is the most generous way to look at valuations. In other words, this includes the expectation of investment analysts of what earnings are likely to be for US companies for the next 12 months compared to their current price. You could look at a lot of different other measures of valuation: price to book value, price to other components of income or earnings from income statements, looking at other methods of valuation. But this is the one that is most forward-looking and is probably most relevant to market at this point. This is heat mapped in red and blue, where red represents overvalued relative to history and blue represents undervalued relative to history. The sectors in and of themselves, you see a lot more red than you see blue, right? And those valuations are aggressive. Something above the line for a total for the S&P 500, which is boxed in this table, that's a forward price to earnings ratio of 21. On average, historically, that would be something like 16 or 17. Okay, so valuations are somewhat stretched. They're especially stretched for technology, consumer discretionary, and communication services, those three areas we discussed. They're also somewhat stretched for other elements. So this is a bit of a risky time. We've had a very strong period since late 2022 where the stock market has done exceptionally well. Analysts also expect earnings to continue to grow. So in just the last year in the S&P 500, the last 12 months, earnings have grown by 27%. That's a very significant amount, I can tell you. I mean, typically, historically, on average, operating earnings have risen by about 7% per year nominally in the S&P 500. So it's been a very strong period. And that period has been underpinned largely by the success of AI-driven companies, and especially those that are benefiting from AI infrastructure build. So I show something here from The Economy on page 6. This is a stacked bar chart. The height of the bar chart is economic growth in the US by quarter, and the components are of different colors. You'll note that since the beginning of 2025, in the middle of this chart, you see a lot more gray bars contributing and subtracting. Those are basically trade-oriented elements of the GDP. So that's because of tariffs and uncertainty around tariffs. The dark blue component is consumers. You may have heard that 70% of economic growth is consumption. That's generally true. We're a wealthy country. We have a lot of income, and consumption from the household sector in particular is a big driver. Right now, people are consuming about as much as they ever have. In a proportion of GDP, in part because of a wealth effect from the stock market, in part because employment remains relatively steady. And as long as people are working, they're happy to consume. The most important thing here is the yellow component. That's called fixed investment, business fixed investment. And right now, that's about half data center construction. And you can see the importance of that element in GDP growth. And in the first quarter of this year, that grew by 10% quarter on quarter and helped to provide the 2% total annualized of GDP. Fixed investment is usually not a big part of the economy, but right now it is. Okay? And as evidence of that, I just show on the following page, on page 7, data center construction spending, which, you know, as a multiple of total private construction spending has grown much more significantly. You can just see that the lighter blue line, data center construction spending has grown much, much more quickly and generally basically since 2022. It's AI related. So AI is not only powering the economy, but it's also providing for very strong earnings growth in the stock market. So that may not continue forever, but we're trying to participate as best we can. And like I said, we're looking for technology opportunities in your portfolio that will help to cushion you should some of this ebullience fade, but also certainly has helped you up until now, and we think will continue to help you. But we just have to be careful about the types of opportunities that we're seeking. I have some additional slides with information, 3 more slides, but we don't need to cover those. Those are sort of optional. If there are questions or comments, I'm happy to take those. I hope this has been a brief but informative tour around the U.S. stock market relevant to your portfolio.
Micah has a question. Micah has a question.
Thank you. I think this is wonderful. I am still concerned. Any investment is scary. But now that we have nationally 39 trillion in debt and, we've exceeded 100% of our national gross domestic, is that going to affect us?
Yes. It doesn't necessarily affect the stock market. The stock market isn't overly concerned about that. And you can see that witness to its performance. There are three reasons I would tap the brakes a little bit on huge concern about that. First of all, yes, we have $39 trillion of debt at the federal level in the United States. However, household wealth in the United States is $175 trillion. Okay? We're an extremely wealthy country. I'm not advocating necessarily for a wealth tax, but if the government was seeking to balance its books, there's money for it to get, okay, if it needed to do that.
Because if we needed to adjust based on knowledge of that type of thing, I think this would be the time to do that. But
It would be a great time to do that.
okay, thank you.
Okay. The other two reasons that I would want to cover just very briefly are there are other countries that are in worse shape. Our debt to GDP is like 110%, which is a lot, but Japan is 250%. Now they have slower growth, and we might have slower growth if we continue down this path. So we have to be a little bit careful about that. The last thing is that it could hurt us through higher interest rates. And that's happened to some extent lately. But there's still a lot of demand for treasuries, and I don't think that's necessarily an emergency. But it's not great that we're, we haven't had a recession for many years other than COVID. And, we're running 6% to GDP in deficits, which, yes, it would be good if we departed from this path.
Sherry and then Lisa.
So the economy's reliance and our reliance on the tech sector scares me to death. Love the returns, but it is tech stocks have gone south before. Do you have any parameters around which you are looking to potentially diversify away from that tech sector? I'm assuming it's something you guys keep a close eye on. And when I say tech, I also mean the Amazons of the world, and things like that.
Yes. So there is one difference between technology these days and technology as it was 27 years ago, when we had the tech bubble that then caused a 3-year-long bear market in stocks and a large recession in the economy. There's one big difference. We have earnings in these companies, and they are very successful. So this AI moonshot that's pursuing super intelligence may not work, but the stock market's view is that the people who are pursuing this at these large tech companies aren't stupid, and they're wagering a lot of their own capital, right? And their own personal capital, and they think it's that important. So I don't think it's necessarily illegitimate, but we are always looking for companies that have quality records and sustainable earnings, right? So that means that when SpaceX comes out with their IPO later this year, they have no earnings. Okay. Amazon made that famous, right? That Amazon had no earnings for like 15 years and then became the behemoth that we know today because they reinvested successfully in their business. SpaceX could turn out to be something like that, but we would be skeptical. We're also somewhat skeptical about companies that have eroding demand and eroding revenue. So Tesla is a good example, which is under competitive threat, but people still love the company. And so there's a strong clientele effect there. So we're always looking for elements in technology that will benefit from some of the expansion we see in infrastructure, but also we're concerned about not taking too much exposure in software companies that may be related to AI. So every investment thesis now that we have in our stock portfolio has an AI component to it because AI is very disruptive and potentially disruptive. So we're looking for businesses that can be stable through that type of a disruption and have attractive fundamentals. And we try not to get too carried away with sort of pie in the sky projections. Thank you.
Go ahead, Lisa.
Sherry basically asked my question, so that's good. But I did want to say that when I was working at the Forest Preserve, and now that I'm retired, I've been very pleased with Busey's strategy of investments. Our fund is, as of 2024, I believe, was funded at 109%. And that is incredible. And that's thanks in great part to your investment strategy. So thank you.
Thank you. You've had good performance. And there used to be a Fed chair from the 1960s and 70s who said the role of the U.S. Federal Reserve was to take the punch bowl away when the party got too crazy. We're not advocating necessarily that you de-risk significantly, but you do have ranges in your investment policy. And it would not be a bad time to rebalance. I mean, I don't know if we're necessarily scared about the future with technology, but markets are risky. And you've seen the benefit of that largely for the last 3 years. It could be appropriate to take a little less risk.
Go ahead, Ralph. Put your mic on now.
There we go. Right? I just got to find the right button. Thanks for your presentation and all the information that you've provided. You just now talked about rebalance, talked about looking at some of those investments. What directive do you need from us, if any, to initiate that process?
You have an investment policy that says that you will typically invest in 50% U.S. blue chip stocks and 50% fixed income under 5 years maturity. Currently, that weighting is roughly 55-45. You have ranges in your investment policy that allow for a 5% deviation from that 50-50. All you have to do is give us an instruction to rebalance, and we would take that back to the 50-50.
And to add to that, I talked here. To add to that, I have talked to Rachel about that as well, and that's something we can help with. We can help update that investment policy statement because the last time it was updated, I think, was 2015. So probably would be good to review that, and we're happy to sit down and talk through that with you all together too.
That would be good. Yeah. Go ahead, Mike.
Do you need a motion for that? Because
I don't know. Let's see what Ralph has more to talk about. So.
Well, no, I don't think so. Just following up on what Taylor just said, if we do decide that we want to revisit the policy, maybe it's best for the next meeting to schedule that discussion after Tracy and Rachel have had an opportunity to sit down with the folks at Busey.
Yeah, I think that's a good plan for sure.
Yeah.
Yep. Well, everyone seems to be pretty much in a consensus of that idea. So that'd be something that we'd be looking into doing, and we can plan for that. Anyone else have anything, questions or comments? Okay, I think we at least have some direction on it, and appreciate the information. And it's obviously a very scary world. My husband does all that stuff for us because I'm not the genius in that, but he understands everything you guys say. And so I appreciate everybody's input a lot. Thank you.
Okay. Thank you very much.
Thank you. Okay, thank you so much for that report and presentation. Next, we have the quarterly financial statements. You have them attached to your agenda. All right. Oh, I thought he said something. Our next meeting will be August 6th. Okay, wow. I don't even want to say August at this point because it still feels like it's March, the weather. Immediately following the Finance Committee meeting, but no earlier than 9:30, right here. Comments by the public? Any comments by the public? Any comments by the public? No. Comments by any members? No comments? I'll be like, Sherry, I'm not going to ask that question. Oh, I did ask twice, so I'm sorry. Can I get a motion to adjourn? Motion Freeman. Second Newquist, all in favor? Thank you.